Good afternoon, everybody. This is Chrisi from SolsticeATR and Balkan Capital Research. I will be covering September 30th till the following week for Friday, the overall market outlook. Before I do, I'd like to start by giving some different things that's happening in the market. That way you guys can keep an eye on it. Number one is the trade war. Is it an end to China currency instability? Question that, put a question mark. Number two, how much does the Federal Reserve influence the equity and the volatility in the market? And does the Fed is out of resources regarding interest rates to keep the economy up? Three, are they doing this to re-elect Trump? I'm trying not to go into politics, but I want to go just in simple terms what we can look for. Is the US eyes on the British exit? Does inverted yield curve always mean a recession? Is the euro searching for more capital? Least, but most importantly, I want you to understand that the overall economy is caused by manipulating the price and currency. And last but not least is Iran as well as Saudi Arabs due to the oil crisis that happened last week. So the most important thing is politics causing a change in the market trend due to these stacks. Let's go in detail and let's take a look at them step by step. What I did, I put the S&P 500 here, the NASDAQ, the Russell, and the Dow Jones Industrial Average as a combination of those instruments on a weekly basis. So we are traveling inside of a channel. We're still in a cone in an uptrend. As long as the combination of those instruments stay above 38,585 and a half, we are still bullish. We just tapped into the 38, 39, let's call it 45 area. That was critical. We fell into it. We tried to test the 18 simple moving average and bounced a little bit on the weekly chart, having those four instruments together. But let's go down to the daily chart and let's take a look at the trend. On a daily chart, we are still in an uptrend. These are the two minor channels. We have a 50% right here, right in the middle. We are underneath the 58%. And we lost the 18 simple moving average right on this candle. We are down channel. We were in a box. This is the Monday, Tuesday, Wednesday, Thursday, Friday action. We came back to the 50 SMA and retested the 38% fib and bounced back to the bottom of this. As long as we're below 39, 185, we're going to be bearish on the combination of those instruments. You see that number here? It says bearish. I'm trying to show you a little bit more technicals so you guys are not biased to one side. If the trend does change and break this channel and we go back above the 39, 302 area, we become more bullish back to the upside. If we fall through the 50 SMA, look for the 50% fib and the 116 and eventually the 61.8 for the bounce. Remember, we have this little gap here and we have this area here. So as long as we can stay above the 61.8, we can come back up, or we will re-travel the distance from here to here. Halfway back is basically down here on this channel, okay? And that would be the yellow dash line right here. Let's go back to the NASDAQ. I want to talk about the NQ first and the Russell. Remember, the NASDAQ and the Russell are my most indicators that I keep an eye on was the S&P 500 because I do trade futures myself. On the daily channel, we're still in the up channel, down channel. This is your 50% channel, and inside this we have a smaller channel, and I got a triangle coming down between these two. You can see it from here and here. We have a symmetrical triangle, and the Nasdaq in the since last week 9/19, it had a down day, then we had Monday, Tuesday, Wednesday, Thursday, Friday. The Nasdaq has lost the 50 SMA in 77.90 or 77.85 in order to be bullish. In order to continue, you have to clear that and come back to 78.50. So as long as we are below 77.88 or 90, we are bearish, okay? If we go above that, the trend may change and go back to the upside to this upper symmetrical triangle, or we can lose this 38% fib, 50%, and back to the 61.8, which is the bottom. Because remember, we have these two little channels, and I have this channel and this channel to create a symmetrical triangle. If it's bearish, this is our target, and eventually the 200 SMA. If it goes back above that 77.90, look to see if we can come back up through this small channel back to the upside of the symmetrical triangle to the upside. So remember, I'm not biased to any side, but the Nasdaq has lost its strength, okay? Let's take a look at the Russell, RTY. The RTY, let's just move in a little bit more. The RTY has been, trying to break out. We had this handle, came back down. We were expecting, to create a handle and break above this channel here. Unfortunately, we couldn't get above it. We got almost to the 1600. We rejected consolidation candle. We had 2 days down, consolidation, up candle. I was thinking it creates a shoulder and go up on Monday. Monday did the change. Tuesday fell down. Wednesday consolidated inside this candle. Thursday inside day as well, and eventually on Friday the Nasdaq fell through the 1545 area and 1535, which is the Fibonacci right here, which is this area, the 37 area. We fell through it. If we need to get back above it, we have to clear the 35, we have to clear the 45 in order to be bullish. So far the transaction has fallen down in the Nasdaq. You can see, in the Russell, we have this symmetrical triangle here and this one here from long term. Our only thing, we have to hold the 200 SMA and the 50 fib. If the Russell is the canary in the coal mine, we cannot get above the 50 SMA, because remember, you got the 200, the 50s, under pressure. Can we clear it to go back above the 38% fib and eventually up here to continue up? If this creates a shoulder and go up, that would be great. If it stays under pressure, look for the 61.8 and eventually this down channel here, which is that pivot and that oval here. Since we lost this channel, it's no longer valid. I have to remove it. So you can do a cone like this. You can grab this candle here to this candle here, or this one right here, which we fell through, and keep an eye on it. On Monday, we'll make this a little different color. We'll make it purple. Edit. And you can come into the study. Just go purple and make it into a smaller little line that you can keep an eye on if it is above or below it. That will keep you, in line if it's going to push to the 61.8 or if it's going to reverse and come back up this way. So that's the Russell. Let's take a look at the Dow Jones Industrial Average. The Dow Jones Industrial Average looks a little bit more cleaner. Let's just zoom in from here. We are still in an up channel. If you notice, this was the consolidation here, then eventually fell through, went back and forth, consolidated in this box, and broke this 26,410 area by this candle, retested and followed through. Couldn't get above the prior high. We fell down. This was the Monday, Tuesday, Wednesday, Thursday, Friday. But the Dow is still holding the 50 SMA but underneath the 18. If the Dow has to hold this level and this oval, keep an eye on it to continue back up. But we are bearish underneath the 27.45. As long as we are underneath 27,045, we are bearish. If we go above it, look back to create that cup, the handle of it, and continue higher. If not, look for the 50, 38%, and see if it can come down in this area, the 26,280 area, consolidate. If it does, that would be great. This is the consolidation before the breakup. If it falls, it's your 50% fib and eventually the 61.8 for a nice bounce back up. Hope this was helpful. Let's go through a couple of just a little instruments. I want to go through a couple of large cap. Most people call them the fans. Let's go with Aapl, which is okay. Aapl, I didn't go clean charts. I mean, it's in a down channel. We are in symmetrical triangle. We tested the 18 SMA. We're holding this channel. If Apple's gonna fall, keep an eye. If it falls through the 216 to 215 area, we get the 38% fib, 50% fib, 61.8 to go back up because you got a little gap in this area here. So my line is first the 50 SMA and the fib. If it's going to continue higher, Apple has to get above the 222, call it 10 cents, 15 cents, in order to be bullish to continue higher. This consolidation, Monday, Tuesday, Wednesday, Thursday, Friday, remember the tariff and all these things that's happening in the global market and the delisting of, you remember the House said, hey, we may want to delist, some of the Chinese equities in the market. So this caused a reaction in Apple. Let's take a look at Amazon. Amazon seems to have been, because it's a consumer product, it was supposed to continue higher, eventually fell through my ADX DMI. I don't have a down channel here. I usually do it. Let's do that. We'll do it together. We'll do this exercise together for everybody, so that way everybody can see what I'm looking for. So we have this up channel here, this line here, to this one here. This is one. So the smaller range is this area here to this one here, but we fell through it. So now we got an open cone since we fell lower. Let's take a look at the wider range. We're going to take this line here that everybody's looking at. I know you guys always look at it. We fell through this channel, okay? I'm not going to grab the other one because this will give me a better symmetrical area from this line, and the other one won't be obsolete. So this is the correct line. This is no longer valid. You fell through the channel, okay? Remove drawing. And if you notice, these two are almost identical. You fell through the 50%, couldn't do anything. Let's get closer to the nearest area so we can get a better feel what Amazon can be doing on a shorter time frame. So we have this candle here that we fell through, couldn't keep it up. Let's just draw it from here. Oops, it does it again, the machine. Okay, come on. We grab it to up here. This is your first down channel. To the downside, you are in a cone, opened up the door. But what I'm going to do, I'm going to remove this channel here, which I drew last week. Remove it because we fell through it. And this is the candle we're going to grab. We're going to grab this one to this one. If this candle falls through, we're going to go back to my ADX DMI, the 1680, and I will show you why. This is my 50% fib in the consolidation of the prior high to the low in Amazon. So when we're falling through, this looks like a zigzag consolidation. We fell through below those four levels. Everybody's looking for the 1672 to hold 1680. I think the big consolidation before we took off, we went sideways, came back, retested it, and broke up. Let's go in here and just work our way from here. In order to continue higher, Amazon has to clear 1770 to continue higher. The smaller range is this high to this low. But what do you do to look for extension? You take this area high to this area low, or this area high to this area low to get the extension. Since the computer did this, what I'm going to do is take this fib here, the nearest high to the nearest low, and see where the extensions can be. And what we can use is a Fibonacci for that level. You grab this area here to this area here, and you'll get the 123. If you notice, my 123 is my 50% fib in this oval. The second area would be below that 70, would be halfway to 38.2, and the 50%, which is 1660, and the 50% should be in here somewhere around the 1655, 1650. So most importantly, we have to hold the 123 in order to continue in that direction. Or you can draw it reversely, which will show minus 23, minus 38 down to this side, okay? So I just drew from this line to this line so I can get you the extensions down to this lower side. So hope this was helpful on Amazon, and I'll leave that fib alone. Let's see what next week holds in the market. If the market tends to change direction and head back up, Amazon will be okay. If it doesn't, this is where we're heading, guys, okay? Let's take a look at Facebook. Facebook, it's in an open cone, has lost 50% of it. It's on the 38.2, holding the 200 SMA. In order for Facebook to hold, it has to hold this consolidation before this breakout. 1, 2, pop, come back down, pop again, come back, retest, try to go back up, and we fell to that area. If this area does not hold it, this is your target in Facebook and the downside of this cone, which is this consolidation here before the takeoff. Let's take a look at Google. Google was one of the instruments that was really holding better than a lot of the other ones. I'm going to remove this because it's no longer valid. We're going to grab this channel here to the nearest. Oops, this is the Fibonacci's, my mistake. Channels. We grab this area here to the nearest high here. And we draw it. We're going to hold the 50 SMA. Amazon seems to have, the Monday, Tuesday, Monday, Tuesday, Wednesday, Thursday, Friday fell through the 18 and closed right at the 1226 area. In order to continue higher, it has to close above that 26, 27 area to be bullish, to continue back up and clear this 2670 area and eventually come up here. If it falls through, first channel is you lose your 18, you lose this channel, you go down to the 50 SMA. And if this channel is lost, we go back into this consolidation area, which is the 38.2 and my 116 SMA. The 200 would be right here at the 1150. Does Google doing okay? Yes, we can draw as well a channel up here this way, showing that the trend is still up. You can grab, either this one or this one. What I do, I grab this nearest one to this one and make it this way. And what we'll do, we'll make these smaller because the ranges are smaller. Edit, we go purple, so you guys can make them, small. That way you learn how to do drawings and be able to help you out. So, and the other one would be the same thing, but I'll keep it that way for now, and I'll just do purple on it, okay? Go here, and let's go to continue. That's Google. Let's take a look at NFLX. Netflix has been seen to be weak. It's trying to pick itself up. Friday it had an inside day of the prior because this was the Wednesday, Thursday, Friday action. It fell through, got recuperated. It's holding this consolidation. In order to Amazon to continue, it has to hold this channel, don't fall through and come back up where it fell from in order to continue higher. Remember those ovals I had? So in order for Netflix to come back, I said Amazon, in order to Netflix to come up, it has to clear those three tops in this candle, which is the open of it, in order to continue up. If not, look back to the downside of this channel down here, and let's just zoom down a little bit to show you where I drew this from. This was the prior breakout in it, which is no longer valid. This is the consolidation. You can see this area here. This is the consolidation. We went a little bit below and went straight up. If Netflix holds this area, it can come back up. Let's see what the market does. Let's go to Tesla. Tesla seemed to wanted to break out of this channel that we had, trending down. Unfortunately, it came, retested the low on some reports that they're going to be delivering more cars and stuff. It got pushed up. So in order to Tesla to continue higher, it has to clear the 245 area in order to continue more bullish. You can see 245, let's call it 50 cents in order to continue higher and create that caught the handle of it, which really came back in the same area to try to continue. If it falls back through the 18 and 50, look for the 61.8 and eventually the backside of this channel, which we can draw one from here. This is no longer valid. I'm going to take it out so you guys we can remove it so we can clean the charts a little bit more. I'll keep this one here because this is an open cone from this area here to this guy here. This is a down channel. You can see, and there's one from here to here. This one is no longer valid. I have to keep it in this cone in this one here. Okay, so let's just remove this one and grab one from here and push it across up here and oops, right into this one. And you have a cone in here in this symmetrical triangle, or you can grab one from this guy to this guy, and you want to make sure you hold on to these two channels in order to continue higher. Let's take a look at CL, oil and gold slash CL. Okay, oil was supposed to be, going up after, what happened in Iran and the Saudis, they pushed it up. They filled the gap and eventually fell through to the prior channel. The 50% in this channel has to hold in order to continue higher, or you can draw a channel from this candle here to this wick here in order to hold to continue higher. We have this down channel here. You want to make sure you do not if it violates to the upside, look for continuation to the upside. So this is a line I'd like to see, that in order for, if this is the consolidation for oil to continue, remember we're exporting more oil than what we need oil because we are not consuming as much. We are a good production country that now we have more oil and more production. Our cost is about $45 in order to do a barrel. Overseas is a little bit cheaper. So the banks, when they leverage them, they want always to keep the price up. Let's see if the 50% fib, and eventually we can clear that 57.60 area in order to continue back up. If we fall through here, we go back to the 52. But if we clear that 57.50 area, look to go back to the $60 area, okay, where that consolidation started from in here in order to break up. This noise that happened in the market caused oil to go down. Let's take a look at GC, and I will finally go back to the ES and review the overall market, what has happened to it. Come on, okay. This is gold. Remember, we were consolidating. We were trying to push. I had a blue mark, and I said the 1508 was very critical in gold in order to stay bullish, and eventually we fell through, and I was always looking for that, eventually this breakout where we did that roundness, not a roundness, when we broke out of this candle. I was looking for that 50 SMA and this consolidation between the 50, 1470, 1475. Remember, that's the 50 SMA. We retested it, came back and bounced off. If we're going to stay below 1508, be careful of gold. If gold's going to continue and change the direction in the trend back up and there's fear in the market, gold will rally. Let's take a look at the VIX or the VIX. Let's do the VIX, the ETF. If you noticed, every time we had fear, the VIX popped up. We go above that 20 area, 24, and come back into the 13. If there's fear in the market, see that we had a wick up and came back and retested back in the 17 area. For the VIX to stay bullish, it has to stay above the $17 in order to continue to the 61.8 and eventually break up to this area. If the VIX comes back below this $17, let's say 16.80, come back down to the 15, there's no fear, then the market will take off. Let's go to the ES one more time, and I want to break something out for you to show you guys on volume profile what has happened. This is the ES on the daily chart. What I'd like to do, you see this, we are in a downtrend. What we can do is grab this channel here, this candle here, and draw it to this one, and we're going to make this yellow. So in order for the bulls to take over, we have to clear the 3000 or 2998 area in order to continue higher. What just happened here? Oops. Let me do this. Okay. In order to continue higher, we have to clear the 3000 or 2998 in order to be bullish. If the market's going to change the trend due to the Russell weakness and the Nasdaq, then we may continue lower, and it's supposed to be yellow. Oops. There we go. This is the down channel. We are holding in this up channel here. You notice there's an up channel here. I have a wider range up here, which we kept. But remember, this is my yellow line. We are in a triangle heading back in. The compression, we bounced off the 50 simple moving average. We got the 38.2 with the way the consolidation was. That 29.24, 29.03, this is the gap in the SPY. If we're going to come back, this is the area we have to look for, and do not fall through the 2900 and continue higher. If the market is weak, look for the 38, eventually the 50, the channel, and bounce back up. This is a minor channel. This is the longer time frame, the purple. The yellow one is the shorter time frame from here to here. That 61.8 area is very important in consolidation to continue higher, and this is your 200 SMA. What I want to do is break it down to an hourly chart, and I'm going to go 20 days, 78 minutes. The reason why I want to show you what has happened in the volume profile in the studies, okay? We were consolidating. This is the value area high, the green, value area low, and this is the pop. This is a study you can get from TOS. It's available for you for free. We consolidated, tried to look up, went above the 20 area, which was the breakdown from the prior high. Couldn't get above that 30 area, the 29. This candle was actually, where is it? Come on, show me what it is. On the daily, it was 25.75. We got to the 24 that day, 24.50, and we fell through this channel. We haven't been able to continue higher. So what you can do, that we can adjust this a little bit more better than the daily. We can remove this. And what we do, we grab this high here to this high here in the overnight, or this candle here. And you can see we have not been able to clear that 29.93, and we fell through. Edit study, we make it yellow. That way you know this is the down channel. We fell through this area here, the 53.75 that happened during trading hours. We came back above it and we cleared the 56.63, the 58 area, and went back to the 63 area. This is my daily range. We were consolidating POC, POC, POC in order to continue higher. And we couldn't clear the 88. When we fell through the 88, the confirmation was for a lot of people the 82 area, and we fell through lower. If you notice, it is bearish below the 29.80.50. Mine is 82, and 29.92 will take us back to the bullish camp in order to continue higher and go back up. Remember, I'm not biased to any side. This is just a consolidation in the volume profile, and I will break it down for you. When the volume profile, this is where most sentiment pop, that's where most people think that there's value. The value area low is usually in red for me, and the green is value area high. So we consolidated, we had 3 days in a row, the POC in the same area volume. They tried to look up in the overnight. We fell through, came back to the 88, we closed around the 80. And on overnight, we went to the 71 low, came back to the 93. When we went up, we couldn't come back above the 88, 82. When we fell down, we came back, reconsolidated, touched the POC, fell through. When you fell through the 82, 80 area, it was a short all the way for the first Cayenne, the pivot, the 63 area, which was 2 days ago, and this consolidation, eventually the 56. When we fell through the 56, came back up, I saw that there's a double deviation, one deviation, two deviation, three deviation. So we had two deviations down. When we were coming back through the 47 area, 48 and a quarter, I took a long there to the 38.2 Feb, which was down here, and we retested where on the close 29, 65, 50, and we closed in that area. Then the 415 bar closed where 68.50. So this was in the after hours. If I go to the 5-minute bar, it'll show you something a little bit different, or the 15-minute, where you can see the push on the 15-minute bar. When we pushed above, we closed right here on this. This is the 1 o'clock. This is the 1:30 clock. So it was around the 29.68 area 50. So let's see what happens Monday. Don't be biased to one side. Remember, trade what you see. Money will flow. If there's a change in the trend, please listen to the trend is your friend. The volatility has picked up. Watch your fingers. Value area high once again, value area low, and that's the pocket. It was supposed to be in this area, the pocket. We shifted lower on the push in the afternoon. So enjoy your weekend. Look forward to seeing you at Solstice ATR on and in Discord. Remember, this video is free. You can subscribe on YouTube to get the video once a week in your email box. Over.